Hello and welcome again. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is Tuesday, December 22nd of 2020. There are a lot of things moving headlines right now. Let's get right down to our topics of the day. Thanks for watching. So there you have it. The topic of the day, the headlines. Congress actually passed the coronavirus relief aid stimulus package, however you want to talk about it, or even categorize it, CARES 2.0 Act. It's an extension of what happened to expire this summer in July. Ultimately, Congress finally agreed to disagree so many times, where I've reported on an update to so many times saying not to hold your breath. And then last week, our information that we received on our daily updates and sort of the insider Washington independent research that we had gave us the indication that Lucy and the football, she might not pull this back from Charlie Brown. She might let Charlie Brown actually kick the football. And that's actually what happened last night. Ultimately, Congress passed 92 to 6 vote to pass bipartisan bill of over just about $900 billion, which actually equates to $2.3 trillion in spending all in, once you actually unpack what's inside. And that's why it's really difficult to actually, I'm very impressed with our legislators, because I can't do what they just did. And here's what I'm about to tell you. It was 5,593 pages that was presented to Congress, and you have 2 hours to read it and weigh in if you're going to pass it or not. They did. So apparently there's a lot of good stuff in there that's good for you and good for everyone else that needs it out there. Let's just hope and pray that's the case. But here's the take-home point. There's main relief components, $600 direct payments for Americans, which is much needed, the $300 a week extension of unemployment benefits through March, $284 billion paycheck protection program for small businesses. So there's additional small business help there. $82 billion for K through 12 schools and universities. $69 billion on the vaccine development and testing in communities and health. $25 billion in retail assistance. $15 billion in performance venues. As we know, that's non-existent right now. $15 billion for airlines. $14 billion for public transit. $13 billion for food stamps. $13 billion for farmers and ranchers, and $10 billion for childcare. Ultimately, a little bit for everybody, and hopefully that money is allocated where it needs to go, and those that need the relief. It couldn't happen soon enough, because right now we're in the holiday season, and a lot of those families are in need, especially those small businesses. So Congress finally got their act together. They passed it. Who knows what's in it? I think it's going to take us weeks to actually unpack the 5,593 pages, but relief is on the way. The take-home point, it's good news. Markets are watching this because a lot of Americans need assistance right now from the coronavirus relief package. So it's on its way, and Lucy has let Charlie Brown kick the football. Next two topics. The first one is oil. So oil reserves, if you think about it, earlier this year, oil went negative, right? So there's so much oil supply. There was a shock early on as soon as coronavirus hit globally for the oil demand, right? Too much supply and everyone stopped traveling. So the demand shock was tremendous, pushing oil negative earlier this year, if you recall. Then you have oil tankers that basically fill up and they go hang out in sea. I don't know if you know this, but that's what happens. There's storage of oil that are in oil tankers that are just hanging out on sea, and they're sort of waiting for us to continue to sort of have supply come back online with demand meeting it. And ultimately you shut down supply, demand increases. Well, this is the 4th month in a row where the oil demand has increased. Therefore, the supply at sea has been decreasing. And that's going to, if we forecast that in the future on this current projection, more and more global travel has taken place. And so therefore, more and more demand for oil. So we could see higher oil prices. We're seeing stabilization right now, but higher oil prices in 2021, which also is a positive for the stabilization of the global economy going forward. So that's a underpinning. We'll talk about more of this going forward as we get into 2021. But right now we're going to pay attention to that because it's important. That's what we're watching here at Blanke Schein Wealth Management, and markets are too. So we should be paying attention to it. And finally, the underpinning of all this is the 10-year Treasury. Let's give you a 10-year Treasury update here. Again, I always talk about the equity markets of the stock market. Think about the S&P 500, the Dow Jones Industrial Average, anything that's a stock, the NASDAQ, so on and so forth. That's the sideshow. what we really want to pay attention to, what markets pay attention to most, is the fixed income market by way of the U.S. Treasury, the 10-year Treasury, simply because it provides us an indication of a sort of stress within the economy, whether the economy is recovering, whether the economy needs more assistance by sending a signal. If it's a weaker 10-year Treasury, that's a signal to sort of Congress or the Fed that there's more help that's needed because the economy needs help. So if you really want to pay attention to the healthy U.S. economy or sort of predicting what's going to happen, you want to pay attention to the 10-year Treasury. Well, if you look at it this morning, the 10-year Treasury from the last 3 months, historically speaking, has had the best performance in its basically since 1950, 50 plus years, if you will. That's a positive on a net basis going forward for equity markets. It means that there's a stabilization in the U.S. economy. It means that the policymakers are on the right track. And ultimately, it means that the economy will recover because it does see recovery in all aspects of the U.S. economy going forward. So it sees light at the end of the tunnel. If you have a firming up of the 10-year Treasury, as we just had over the last period of 90 days, that's a net positive. In fact, the forward returns on S&P 500 are positive in different multiples, depending upon the magnitude of sort of the firming up. We had a 10-year Treasury that firmed up about 10% in terms of its rate of change on the yield itself. So the yield performed very well. It's stabilized over the last 3 months. We want to continue to see stabilization in the 10-year Treasury. Not so much going up from here, but just stabilization is key for equity performance. But more importantly, it's the underlying performance and the signal for the U.S. economy and the global economy that everything is trending in the right direction. So always keep your eye on the 10-year Treasury. That tells you a lot, even more about the equity markets as well as the credit markets. So we keep our eye on that at Blanke, Schein Wealth Management, because it's probably one of the most important factors you can pay attention to. So that's our update of the day. Oil is increasing because of strong demand. 10-year Treasury is firming up, and then we have help on the way with the coronavirus relief, which are all good, positive signs for in the short term right now for the U.S. economy. So that's our update for today. Thanks for watching. Like and subscribe. We'll see you again next time.